So I've got 4 buys in the healthcare space this morning. So let me set the scene first. When Derek spoke last Friday, he mentioned the theme of hospitals without walls. So that's providing healthcare services increasingly being delivered outside the hospital system, either into the home, through day hospitals or remotely through teleconsults. Also, Lisa Shan mentioned earlier this week that healthcare, since the end of March, has been one of the poorer performing sectors. So as a result, we've got a number of stocks which have really come back into buying territory. So let me start. Firstly, ResMed. So they reported a very solid quarterly result last Friday. However, the management did call out a U-shaped recovery during 2021, so growth slowing over the quarters. The share price has come under a bit of selling pressure, so it's back to $24, $25, and we've got a price target of $29. So that sits in that theme of services being provided outside a hospital system. So we think ResMed's very good buying at the moment. Moving to the IVF space, we opened an active opportunity stock yesterday, and that was Virtus. Basically, they're non-invasive procedures. A lot of their consults can be done remotely. And with the return of elective procedures at the end of April, what has happened is that there's been a big pent-up demand. So June and July Medicare numbers and volumes have really been very strong, and we expect that to continue into August. They're going to report their full year results next on the 18th of August, and we have the company coming in to present on the 19th. There is a new CEO in place, and from our talks across the industry, Kate Munning is very highly regarded. So she was formerly the Chief Operating Officer for Ramsay Health Care's Australian operation. She's got a very strong clinical as well as operational background. So I think she's going to do some really good things for Virtus. Just be aware that they will pay their deferred interim dividend at the end of November of 12 cents. However, the books for that have closed in March. But I do expect Virtus to resume paying dividends. If they do that in February, March next year, gives us a 12-month yield of around about 3%. Company's trading on undemanding fundamentals of around about 11 times, and they have some reasonable growth coming through over the next couple of years, and the balance sheet is in reasonable shape. So that's Virtus. We opened that active opportunity stock yesterday. Third stock I just wanted to bring to your attention is EBOS. Again, that share price has been a little bit weaker, trading around the $20 mark. We've got a price target of just over $24. Has a yield of around about 3%. It rarely disappoints when it reports its interim and full-year results. For those that don't know the EBOS story, they're the largest pharmaceutical wholesaler in Australia. One of their large customers is Chemist Warehouse. They distribute not only to retail pharmacies but also across the hospital system, and they have an animal care product business as well. The list, it has dual listed. It's listed on the New Zealand Exchange as well as the Australian Exchange. Most of the trading gets done over in New Zealand, so it's fairly illiquid on the Australian market, but you can pick up stock if you're patient. Looking at consensus numbers over the next couple of years, they're expecting growth of around 10%, and as I mentioned, offers around about a 3% yield. So I think EBOS is excellent buying at the moment, around $20. The final stock I'll just bring to your attention is Nanosonics. So that's the high-level disinfection company. I've mentioned previously in morning meetings, if it gets back to around $6, that's well and truly back into buying territory. I think this disinfection theme has got a long way to play out. The share price has come under some selling pressure over the last few days. It was on the back of a report that was released by a competing broker, really talking about the weakness that's expected in this FY20 result, given the lack of access getting into the hospital systems over in the US. All the analysts are expecting flat results, so no surprises there, but that when they do report their result, that could create a little bit more weakness. The other point that was noted is that some uncertainty in the timing around the release of the second product. Again, what the company has told us is that they expect this product will be commercialised in calendar 21, so we're expecting some sort of comment at the result as to whether that's still on target. But certainly around the $6 mark, I think it's great buying. It's particularly for medium to long-term investors. That's Nanosonics. So they're the four stocks that I think are worth buying: ResMed, Virtus, EBOS, and Nanosonics.